Hello, everyone. Good morning. How's everyone doing on this fine Monday morning in February? Good morning, Patrick. Good morning, Martinez. I like this now. I can see the likes. I can see when people like the video. Good morning, Donald. Good morning, Sterling. Jacob. Royal Palms. Good morning, Connor. Good morning, George. Good morning, Paul. Hey, Paul, which channel are you watching on, by the way? Just let me know which channel you're watching on. Michael, good morning. Sterling, thank you for posting the information. Good morning, Charles. All right. Very quiet news day. I mean, unless something rolls across the headlines, there is nothing planned. We just got the T-bill auctions this morning. So that's done. Stock market, we triggered those double top patterns. Remember, those aren't major pullback. Those are minor pullback. So far, looks like the chips and the mega caps are playing along. Tesla slightly up. Healthcare rotating. Remember, healthcare is a defensive sector, and it looks like there's a rotation into that a bit. Energy stronger with a slight bounce in oil. So far, energy is the strongest sector up today, then followed by healthcare, and then technology and comm services leading the weakness this morning. Fed watch, this is interesting. So for March, remember the next Fed rate hike isn't till March 22nd. So we're a long ways off, but a 50 basis point is peaking here. I still think it's going to be 25 unless we get really strong data inflationary. But what's more interesting, remember how the market wasn't really buying a 25-25? Now look at this. A 25-25 is 71% probability. So keep an eye on this. That's why we're going to be checking out March and May. March and May combined are the two we need to watch. Fear and greed. Still an extreme greed, but this should drop down a bit with the open today. Gamma, we're right there. The gamma flip is about 41.58 right now. We're trading 41.18, so we are in negative gamma. All right, so can that give a little juice to a downside move? Yes. It can also give a little juice still to a little upside move whether we bounce today, tomorrow, maybe we get Pullback Monday into turnaround Tuesday. We shall see. But just remember that gamma flip is above here, closer to 41.60. So above there, you get dealers selling into it. Not much in terms of earnings today. Even afternoon, you got Pinterest, you got Activision Blizzard. That's really about it. So nothing that's really going to rock the markets there. All right. Still have the notes on there. By the way, the notes triggering that double top too. You can see the notes triggering it and heading down. So target's still on the notes, 113.08.5, 112.25.5, 112.11, which potentially takes us back to the end of December lows, jumping over to the markets. Remember, this is a slightly lower probability double. Why? Why, you may ask? Well, the longer term members don't have to ask, but if you're new here, by the way, if you're not, don't do that. I keep forgetting to. If you're new here, please do consider subscribing, ringing that bell, and hitting the mic button. All right, got that out of the way. Slightly lower probability since it is against the daily rotation zone, and so far we're bouncing against the 8 EMA. So that is why it drops the probability slightly, but not enough that we would not be willing to trade it. So on any bounce, I'm watching the breakdown levels. Let's see where the real key is right here. Let's see if we can find something. Here's the best way to look at it is on the 1 hour. You have this little support ledge. Remember, use the candle bodies, the wicks trigger a double, but use a candle body. So on any rally back here, if it does rally, the area I'm watching is the prior trigger point, 41.3250 to 41.43 for rollover move. That is key. The stop reduction is 40.94. There will be some pretty decent support right around that round number, 4100. Also remember, this is into a clear path move. Retracing the J-Pow Wednesday, the J-Pow weak-ass press conference Wednesday. So this could easily still come down because of that clear path move. So can't get anything overly bullish unless this pattern is stopped out. And without the stop reduction target, the official stop would still be on a closing basis of at least a 1 hour closing basis above 41.80 or a trade through 41.89. So anything would be in a minor just rally unless we get massive momentum followed through by strong market internals. But without something on the radar screen today, that's where we sit. Now, if you're going to use harmonics, use those levels for your stop. But if you're going to use the trading harmonics, you can see here the 25% harmonic roughly coming in with the breakdown level that I already listed. 37.5 coming down with the candle body level. Your level above that would be 41.57, then 41.70. Good morning, Options 22. Good morning, PMG. Channel you just put. Watch. I recommend go, hey, Paul, because I don't know. I'm going to cancel my restream, and I see you're on restream because now I can stream a lot just from the Ecamm app. I'd recommend going to watch it on Path Trading Partners YouTube channel because I can't restream to both Pure Exposure and Path Trading Partners until I make some changes. So do a search for Path Trading Partners on YouTube and check it out there. Do a search actually while this is still going on to see if you can find the stream. Thank you for posting all the information, Sterling, to help everybody else. And yes, I saw the Dell cut 6,650. Thank you, Paul. Thank you. I just want to make sure the people who really are important and don't want to miss this, you go to the main channel primarily. All right, NASDAQ also. Not a substantial pullback so far with the NASDAQ. I'm just going to put up the key. The stop technically hasn't dropped. It's going to be higher than this, but on a little pullback level would be 12,580. Candle body breakdown, 12,551 was the trigger point so far. This holding up the best. We still got the rush into the NASDAQ. Also, do remember that both daily and weekly cycles are at the top. So we should see a continued pullback, but in the insane markets, nothing are guaranteed. It's why we always trade with stops. 12,352, 12,252, 12,152.75 are the targets lower. Again, I'd be using the harmonics on any retracement, and the technical invalidation pattern, though, is back on a closing basis. Just remember 12,800. It's technically 12,825, but you could just remember 12,800. The Dow, again, I like the comments on the Twitter last night. The Dow looks like the NASCAR race in the LA Coliseum. I did tune into that for a few minutes. Thank you for that little reply on Twitter. That was but there's nothing going in here. Trading against a little minor support, but remember on a breakdown, 33,575 is the 50. Not until we can really get below that on a closing basis am I really interested in anything to the bearish side. There's just too much support. Get below that 50, we could then make a run back to the December low area, but it's still in a consolidation pattern. To the upside, the resistance now is 34,160. That's why I'm ignoring it for the most part. Russell triggering the pullback moves also. Catching so far right at the 4-hour rotation zone. Still your targets are 1964, 1955, 1946. To the upside, This one's sloppier in the Russell, but the area, you got to sort of give it a zone for the breakdown. 1981 to about 1988 will be where on a rally I'll be watching for a potential rollover play. The technical stop out invalidation is 2003.7. Right now, using the declining harmonics, I'm going to be focused on about 1983 and then that 1988 levels. Let's get to the spiders and the Qs. The spiders and the Qs, little gap down. We could also finally update our harmonics. Oh, that's so beautiful. That's so beautiful on our snapback rally. If we go up to eke out some new highs, we have a now nice cluster. Right now, 409.28. I will then be watching the low, 411.09 from Friday. Then the open, 411.59. Then the gap fill, 412.35. So those will be my levels. Besides lining them up with other harmonics once the market opens, those will be the key levels. We have technically, with this gap down, we filled the little gap still left behind from Wednesday to Thursday of last week. So that gap is filled by a gap. The other key support areas, we do not have a double in this. Let me just measure this out. It would be very sloppy. Technically, oh, that's really ugly. Yeah, we technically do, but it's a really ugly one. But it gives us levels. It gives us a nice levels. Okay, so we can use this. And look at that with the prior key support level before, first target on, and I would definitely use the conservative targets. 408.7, 408.80, just go to 408.80, 407.32, prior breakout level that we broke above on JPOW Wednesday, and then 405.9, just go to 406 for the final target. 406. So those are the key levels to utilize on the way down. So that's nice. Sorry, I didn't. Now this one is a lot easier to see. So we still have the gap left behind. The technical gap fill is 301.07, trading 303. So 301.07 is the level. Do not ignore about 301.35, 301.35 to 301.07 will be the area. 363 is the first technical target for the double. 298.67, 290.71. To the upside, 304.55 is the level I will be utilizing. Should we try before the full gap fill? That's really close to that open, which comes in at 304.94. So I'll just use the low. And then I would be targeting, besides using gap fill harmonics, I would be targeting then the close at 306.18. Get those out of the way for now. Let me just put up my forward harmonics. You never know in this market in case something extreme happens, but I'm still watching for that pullback, and I'm going to be especially watching that second target area on a breakdown. The first target area is like right around that gap fill. The second target is the 8 EMA and rising rotation zone. Interesting enough, the final target, let me move up a level here, is right by a breakdown zone. See, it broke above there, closed below it, then it took off on JPOW Wednesday, so that's your final support. So the harmonics from the doubles are matching the pullback to the rotation zone really nice. Does that increase the probabilities? No. Probabilities are still the same. It just gives us a reinforcement of our targets. The DAX pulling back to the rotation zone on a little further pullback. There's major support about 12,257. But that's all I'm watching is a pullback into this rotation zone right now. We already looked at the notes. Marching on down. Dollar index continuing its rally. Again, we've hit, I did the reverse harmonics, by the way, between this low and don't go to this high because this is the technical high from this last move, the last little swing high, which gave me this target right near the breakdown area. So we had a cluster at this 103 area. My next target is 103.50, 103.55. That's a pretty important target. And where does that take us? Remember, we're watching for the play. We're back to the weekly rotation zone, but I'm still watching for. It doesn't have to go in a straight line. We can get some backfill. But then on backfill, I'll be using 102.74 for the first key level, and then roughly about 102.50 on any pullback plays. VIX up slightly, but still caught in this very lower range, so there's not much going on there. If you're going to try to keep an eye on the VIX, really watch that on a closing basis, the 20 range. Crude, very weak bounce so far. We'll be watching to see if this sets up a %B potential buy tomorrow, but not much today just yet. If it did break above the 74.36, I'd just be paying attention to, that's the rotation zone. It would be about 75.45 would be if it was trying to scalp something alongside. I'm just waiting for a pattern to set up. Natty gas, really trying to form a rounded bottom down here. We talked about that a little more in depth yesterday, so check out that if you're interested on yesterday afternoon's podcast. Gold, gonna be watching to set if this can set up some %B buys, but nothing yet today. Same with silver. Same for copper with daily cycles on metals getting to the low area. What else do we have? The 10-year really is trading against this 50 basis point mark. Again, going to have to see if the Japanese Bank of Japan jumps in again, if this really gets a move on above 50. Remember, I'm standing aside from the bearish side. We have a longer-term bearish pattern, but I said watch for the counter move up, and it's following through. And we could easily still come up and kiss this neckline goodbye. So from the rollover play, very, very patient still. And even on a pullback, the level would be, we'd have to get below 130.50 before I'd be interested in anything and hitting this little minor harmonic level on the upside. Euro, now below the daily rotation zone, I am targeting back between 106.62 and 107. On any rally, the key resistance now is 108.50. Pound, going to be watching for some support, especially coming in around 119.60, and possibly a bounce, and then possibly trigger if the dollar can really get a more substantial move on, triggering that double top. Other than that, if you're interested in the pound, I'd be using the harmonics for retracement plays. Bitcoin, still watching the bottom of the rotation zone. We should be starting from an Elliott perspective to get a bigger pullback at some point, but it has not triggered yet. First indication would be a close below the daily rotation zone. Tesla, little gap up, 193.29. Let's just see how that's going to look right here. Let's see how that's going to look. Does not technically invalidate the double yet, but if it rallies much into the open up in here, it would be then a triple top. So the double top that's not triggered would be off the table. Until that's off the table, the only thing I'd be waiting for is the close below 182.61. Otherwise, we still don't have and that's a lower probability against the daily rotation zone. So no major topping pattern, just a minor topping pattern right here. Your major cluster is 238, 250, and then above that, the next level is 208.24. All right. Oh, you were watching for the other. Well, thank you for watching for 9 months. You were all alone, Paul. Now you're on the other one. So I just wanted to stress this one, not from any other reason, but that this will be the primary one going forward. What did I miss here? What did I miss? I'm just scrolling back through. Thank you again. Six figures. I saw that. Like, what was it? 50% of people earning six figures are living paycheck to paycheck. Could not imagine that. Living paycheck to paycheck with six figures. Wow. Wow. So, well, thank you for posting all this. Where else do we sit? That's what I am watching. Remember, quiet news day. So I will be paying attention to any other headlines, but the market's somewhat taking the Fed a little more seriously, that they're going to have to go above that 5 mark by May. Taking it a little more seriously. So that could change. Now, that does not mean this market, again, has to roll over and take out the lows just yet. We got a lot of support to go through, and this is only a minor topping pattern. But we will be watching for a more significant topping pattern. Remember, there's 3 modes. We have bull mode, which we've been in. We've had bear mode, we were in last fall. And like the Dow, is in consolidation with shorter term moves only. So could the S&P even pull back in this area and go into consolidation before another substantial rollover play? Yes. We will come up with the levels, but do not forget, everything does not either have to go up or down in a straight line. With that, I will be back after the close. Everybody have a fantastic trading day. See you later. Bye for now.